Hello and welcome to Healthcare Finance Unit 6. In this unit, we will be discussing healthcare financial reporting. The top 4 learning objectives for Unit 6 are: explain why financial statements are important to managers and to outside parties. Describe the components of the income statement, revenues, expenses, and profitability, and the relationships among these components. Explain the purpose of and describe the organization and contents of the balance sheet, including the basic accounting equation. And state the purpose of and detail the contents of the statement of cash flows and the way it differs from the income statement. Now remember, these are the top 4 learning objectives which we will focus on this week. Other learning objectives which you are responsible for understanding can be found within the classroom page. Explain why financial statements are important to managers and to outside parties. Financial statements provide information about past and present business operations and allow for forecasting of future operations. There are 3 primary financial statements used in business, including the healthcare sector: the income statement, balance sheet, and statement of cash flows. Each of these statements provides valuable information for both internal and external stakeholders of an organization. Typically, these statements are distributed as part of an annual report at the end of the fiscal year. Some organizations also hold open forum meetings to explain the financial condition of the entity to internal and external stakeholders. This transparency is especially important for nonprofit entities. Now, let's take a deeper look at each of these financial statements. Describe the components of the income statement, revenues, expenses, and profitability, and the relationships among these components. The income statement, which is also called a statement of operations, provides the bare necessities, that is, revenues, expenses, and profitability. If this information seems basic, it's because it is. That's why other financial statements exist, to provide greater detail and insight into the rough cut of information presented on the income statement. Overall, however, the income statement can give you a bird's eye view of an organization's profitability position. Explain the purpose of and describe the organization and contents of the balance sheet, including the basic accounting equation. Next up is the balance sheet. The balance sheet provides valuable information about an organization's assets and liabilities at a given point in time. Because you can sell equipment, a building, or finish paying off a loan at any point in time, the balance sheet can and should reflect these changes in real time. As its name implies, the balance sheet must balance. This brings us to the basic accounting equation. The basic accounting equation is total assets equals total liabilities plus equity. It's important to understand that not all assets and liabilities are created equal, meaning assets and liabilities are categorized into current and long-term classifications. A current asset or liability is one that can be realized, meaning converted to cash or paid off, within the accounting period. A long-term asset or liability is just that, only realized over the long term. An example of a long-term asset would be financial investments, while a long-term liability would be a 15-year loan. The final classification is fixed assets. As the name implies, these assets are not easily sold and can really anchor an organization's balance sheet in times of financial peril. Fixed assets, such as property and equipment, can also be classified as real assets, as they generate revenue for the organization via direct consumer interaction. Real assets are opposed to the role of a financial asset, such as an investment or stocks or bonds. State the purpose of and detail the contents of the statement of cash flows and the way it differs from the income statement. The final financial statement we will discuss is the statement of cash flows. This statement is beneficial for internal and external stakeholders, as it details the activities that contribute to the inflow and outflow of cash for an organization. We can contrast this to the income statement, which reports the bare necessities of financial position. If you are a manager in a nonprofit entity, it is particularly valuable for you to understand the reporting of cash activity, as your operations are often more closely scrutinized by both governmental and donor oversight. It's now time to dive in and further explore the topics covered in Unit 6. Remember to complete the following. Watch supplemental videos, complete assigned and suggested readings, and review discussion and assignment instructions. This concludes the presentation content for Unit 6.